move like that sort of powerful there, usually it doesn't just roll over. The market bouncing back this strong here is a positive sign. It's not a weak sign. It's not how a sort of lower high would sort of set up here. Of all the indices there, this is sort of showing the most amount of strength there, which is kind of more in that value sort of than the growth sort of area.
The market's climbing back up and almost within all-time highs. The question is, will it get there? Which companies will take it there? And what to trade along the way? Is it also healthcare companies and property trusts that are still dominating and outperforming, or is it something else? Gary Glover's been the one to guide us through these questions, along with the latest trading insights. Good morning, Gary. How are you?
I'm pretty good, Chris. Yourself?
Well, I'm surprised to see the market's still climbing up, but so it goes. Reporting season still gives us surprises. And power's on. The US market up there. I guess my question for you that I've really been thinking as I look through and read your weekly report that you send on Mondays, but we look at on Tuesdays. Is it enough? Are we close enough to be like a magnet to be drawn back up to the highs? And if we do get there, or if we don't get there, what does that signal, especially for the US markets?
Yeah, I mean, the bounce has been pretty impressive there. Pretty strong first week, and then a very strong second week as well. So, yeah, I mean, sometimes, a move like that sort of powerful there, usually it doesn't just roll over. Yeah. So a lot of people are thinking this is just going to be a lower high here and roll off here after having a bit of a sell-off there. But that's not that's not how a lower high would sort of set itself up here. So, so they either expand to a slight new high. What you'd probably, think most of the time there when it sort of bounces this strong here, you get a bit of a, strong move there up near the high there. And then maybe you'll have a little bit of a congestion or a little tight pullback before that, So, yeah, we might even get like a 2 or 3 week congestion there. So, a bit tricky here. I think you'll, more than likely we might sort of see some sort of congestion there. But it'll probably just be sideways orientated. Chris, it's pretty firm bounce here. So, yeah, all the other risk there is probably, I think, if we go back and look at the 10 years of the cycle there, I think we had a bit of an August sort of sell-off there in 14, I think, and then bounced up to like a new high in September. And that actually expanded down to a new low in October. So I ended up doing it like a broadening pattern. And then it had the end of year rally from that period. So you might get something like that here. It's been a pretty strong bounce here so far. So there's some pretty, I was looking at CVA yesterday. I don't know how it came up, but this came up and P of 24.8 times, it's something in a yield of 1.5%. And I thought, that is madness. So it's like, yeah, but look, I know there's plenty of things that are overpriced there, but there's plenty of market that's been whacked as well here. So like all the resource names are down the bottom of the channel. So yeah, so it's going to be an interesting sort of market here. But yeah, but I think the market bouncing back this strong here is a positive sign. It's not a weak sign. It's not how a sort of lower high would sort of set up here. So it does suggest that we're either going to basically maybe congest under the high, or we're just going to push to a new high here. So yeah, I'll go back and I'll look at maybe the 10 and 20-year cycle there, just because that sort of, it does look a little bit like the 10-year cycle to me so far. But yeah, we'll see what happens.
Okay, well, that's positive to hear from the US on the NASDAQ particularly. I imagine that's very similar kind of thing. We've had that same gusto and under the recent high, undercut it and quickly got back through it, almost back up to the highs. So 2 to 4 weeks consolidation, sideways activity, still the S&P. So similar sort of boat there. Anything to add on the S&P? Well, it's very much same boat.
Yeah, same boat here. Really, it's sort of, it's not great that it's broken below that previous swing high there, but has sort of held the low in place. So that's probably more important there. You sort of can get, you can get this overlapping sort of, move up new highs and, and it can overlap there. So it's just important that it does sort of hold those sort of swing lows in place here. That's probably the most important thing there. So, it just means that probably the pace of this move is going to slow down, because once you start overlapping, then that's not sort of sitting on top of the move or not leaving space. That takes the aggressive nature out of the trend. That's when it sort of starts to slow down. So you'll start to see this overlap. It'll overlap top, it'll overlap again. So those overlapping trends aren't the strongest, but you can go through a period of that overlapping for a while here, which maybe will overlap until the end of the year, as opposed to sort of being really aggressive. So just might mean the market's going to be pretty choppy here.
That does fit with your research on inflation from the 40s and 70s. We still do have inflation. It's coming under wraps, but still around. The S&P 200, the Aussie top 200, ASX. Well, we've broken out of this congestion period. It overshot it and then quickly came back under it. And then we've come back beyond the overhead resistance lines. So what do you take of this volatility that we've had and where we sit today?
Yeah, it's not the ideal sort of setup there. Obviously, having that tightness and then breaking out. Didn't quite get to the target of 8,200 there, but went too far away. Not unusual to sort of pull back into the range and back below it, but it really has just come back to the old support zone there. That's probably the critical level, is where it's bounced from there. And we have seen, previously there sort of, clear signs of buying those sort of dips in the past there. So, we've just seen it again. So, yeah, so at this stage, although it's messy and a bit overlapping here, it is still sort of, supportive that it's sort of held that level here. So, that still means we can probably still go high here. Risk maybe potentially out on a new high. Just might be a bit choppy, to get there, which, sort of fits in with the US being a bit overlapping as well.
But the last one of the indices, the Dow Jones, similar sort of thing, very close to the highs. It broke out of the range, came back under it. Like the ASX, just got under that support or under that trend line.
Yeah.
And almost back to the highs once more. So is it closest to the Aussie, closest to the NASDAQ, S&P?
Well, definitely the strongest of the indices there so far, because you haven't overlapped, and we've actually got spacing between the last sort of high and previous low here. So it's actually holding, it's holding up the strongest there, really. So in terms of the short-term high, and even sitting at the top of the old high as well, still a bit of spacing there. So it's, it's still pretty robust there. So even though it's overlapping in nature there, it's still in a fairly robust position there. So, of all the indices there, this is sort of showing the most amount of strength there, which is kind of more in that value sort of than the growth sort of area. But if inflation's gone here and then we're about to get rate cuts there, maybe that changes the future there. But yeah, it's interesting. This one here is holding up here.
Nice. Well, that's good outlook for the indices. And we'll have sort of a blueprint to look forwards, or an overarching view. Sticking with the healthcare and property that you've talked about for some weeks now, we've got Australian clinical labs in that healthcare space. We've got this movement happening here. So this compression, sort of looking off the bottom, we've got sort of that impulsive drive and then sort of volatile, but seems to be contracting. So what are you looking for here with ACL in this current part of the chart?
Yeah, so the whole thing's sort of contracting under the sort of 270 level there. And yeah, obviously the pullbacks are sort of getting narrower and narrower here. So I do like the fact that we've sort of got this overlapping 1, 2, 3 low as well. Pretty exhausted there. Had a nice bounce out of that low, broke above a swing high as well. So that, that's, to me, that's a nice, that's a good looking sort of low there. And now we're sort of looking to build there. And we're definitely seeing those healthcare names being, it being one of the strongest segments there over the last few months. So, yeah, definitely some strength in that sector there. So, yeah, this looks pretty good here overall. So, yeah, it looks pretty robust. So I get reports tomorrow, if I'm not mistaken there, or might be the 21st. So, yeah, I think if this one sort of contracts back in here in the range there, could be, could be one to potentially look at adding to here, just because I think this sort of sector looks pretty good.
Well, that's probably a good point, just quickly to divert for a second. We are in the middle of reporting season. Obviously, you haven't taken a position on this. Oh, you said, sorry, you do have a 4% position. So how do you take the trade like this into reporting season? Do you adjust your stops previously, have them in the market sitting there in case of whipsaws? Do you watch intraday and monitor it depending on sort of flows, because it can be very volatile in the first 20 minutes after announcement.
Yeah.
How do you take a trade in a position like this into reporting season?
Yeah, great question. Great question. That's sort of, there's a lot of companies sort of reporting this week here that got positions in there. So it does make you a little nervous there. Personally, as a trader, they probably don't like to have too many positions coming into reporting season. Try and navigate around it. But I guess if you've got a little bit of, I guess in this case here, we've got a little bit of fat in that entry. So we've got a little bit of room there. So I wouldn't necessarily take that position off there because it's sort of sitting in a reasonable, position of profit already. So I think if you've got some profit there, you probably, but you got to give yourself a little bit of room there. But the reality is, if it breaks below the last swing low, then that's probably negative, and you don't want to be there. So I think you've just got to sort of stick to your rules there. Don't be over positioned, I guess, in reporting season. You can see some big moves there. I mean, I think go through the last few reporting seasons there, we're sort of definitely seeing moves of 3 to 5%. It's not or it's actually quite common. So some of the stocks can move that amount. So if you're got to allow for that. So you got to sort of trust what you're looking at, how it's trading. But got to risk as well. So I've sort of, one thing I have done, Chris, is instead of being concentrated in fewer positions on probably less, sort of size, but more positions, which is sort of not really the way that I'd normally like to be traded there. But then that does de-risk there because you sort of don't have as much on the line there. Whereas normally, personally, if I was coming into reporting season in the past there, I would, but if I was pretty heavy in a sort of something, I'd probably trim it. If it'd been trading pretty well into reporting season or into the report, I might trim it the day or two before, just make sure it's manageable.
Okay, so if you've got manageable positions, you've trimmed them depending on how it's traded into the reporting date. You just mentioned on the stops there, obviously if this one breaks below the swing low, you'd be out. You probably don't want to be there, so you'd be out. Would you be changing that stop into reporting, or you would just make sure that you were diligent with the rules that you had and know that volatility was expected, so if it triggers?
Yeah, it's a weird one there. Sort of like, man, there's been a few things that I was expecting to happen, and they did happen there, but you don't, you're seeing moves of like 10 or 15% here. It's hard to just sort of take a punt and bet on those, occurring, even though your sort of gut tells you that's going to be probably a good result, and that's probably going to be the outcome. But the other token, I'm going to have one other day that I was personally long, and the result wasn't so good, and gapped up, something like 5%. That didn't make sense to me, so I cut it in half and moved my stop up, and then it ended up being a really good decision. But it doesn't always work out that way. So it's it's just all about managing the risk, Chris. Sort of we're trying to be around here for the long term. So you got to try and trust yourself a little bit, but just don't have too much at risk here. That's the key there. But every now and again, there's sort of something that you really, really like, you got a high conviction there, and maybe you'll have a little bit of a position sort of into that result because you've sort of got a pretty strong view on it. So it's I guess there's no sort of no set formula there at the moment. Just probably just apply a bit of common sense.
Nice. Okay. Well, the next one in your report is SEK. Looked at this one before. Look at the false break region down here. The October 23 low has been undercut more recently into July, where we are now in August. But it seems to be quite volatile down here with a heightened level of volume.
Yeah.
Is that a good thing at this part of the chart? Is it a bad thing? What do you interpret for this kind of behaviour?
Yeah, so normally you get the greatest volatility either at the highs or at the lows. So we have sort of seen a bit of a false break here, retest of that old low. We've seen elevated volumes there, so that's possible accumulation occurring down those lows as well. And we've seen a few bounces off those lows as well. So every time it's sort of gotten down deep here, it's a little loose. So loose as in basically it's a little volatile. You would probably like to see this tighten up here. So one that I haven't taken a position on, but I'm hoping what it'll do is actually tighten up. But it does look, there's I do like the fact that there's a false break there. There is signs of accumulation there. It has sort of held that low so far. The only negative is that it did get down on the reporting date, even though it did recover some of its price on that day. So it's sort of slightly negative result, but market did cover a bit. So it's a, -2, maybe +1. So it still ends up being slightly negative for the day. So I prefer to sort of see, because I think there's a strong correlation as to how they perform on day one. Does have a big bearing on how they perform the next sort of 3 or 4 months. So that's quite sort of been proven that. So yeah, just got to make sure they sort of hold here and build here. So it's interesting there. I just think this one here, I just want to see it tighten up a little bit more. See some of this volatile nature coming out of the market a bit more, and just that's why it's a consolidation would be quite nice here. If the market consolidated 2 or 3 weeks just under the high, that'd be probably a better setup there. Because we sort of keep going up here, then maybe we're going to expand to a new high and expand back down again, and then maybe that more volatility does make it more difficult. So yeah.
Okay. Well, another one that you've looked at a fair few times before, Pexa Group, saying it looks constructive. We've seen it churn its way through this with a bit of volatility, range down the bottom, shoot out explosively, come to break a swing high, and then get belted back into this sort of range, but held by this support line, only to be explosive once more. And then how would you describe this behavior here after the explosive movement, the behavior that we've had sort of May, June, July to where we are? And why is that interesting to you?
Yeah, well, it is overlapping. It has sort of broken the downtrend, but yeah, it's still sort of not a strong trend here so far. So I do like the fact that it is back above that sort of previous swing high, because that was sort of the area I was hoping that would hold there in its entirety, because that would be a show of strength. But it did break it marginally, but it has recovered from there as well. So again, this looks quite good here. Just needs a bit more time here. Needs to sort of again tighten up as well. Needs to sort of just prove that level a bit more as well. And it does report here in a couple of days' time as well. So I think that's probably going to be sort of telling as well. This as well. So no position from me personally, even though I like this one. But yeah, definitely one that I'll probably look at here. But sort of the thing tightens up here and holds here, which is definitely one that I'll be looking to probably try and add here. Because I do think this has got we're sort of with the movement to the UK there market. That's it's pretty positive sort of growth story there. Just I mean, they've only sort of to be honest, I was surprised they've only sort of signed one bank here so far. But we'll want to send a few more sign on, and that there was a sort of second bank interested there, but it hasn't been sealed there yet. So, but I think that's just a matter of time here. But it is disappointing they haven't already done that actually. So, but yeah, just want to keep an eye on that. I think this one looks pretty constructive overall. Just needs maybe a little bit more time here.
Okay, so more time on Pexa. Block incorporated CPIs, Square, the old Afterpay, after it was bought out.
Yeah.
Looks like it's very overlapping. So this is just trying to figure something out here. When we say overlapping, we're looking at the price on the right-hand side. We're going from $60 to $120. So volatility not for the faint-hearted.
No. So it has sort of come back down to that. Well, it has come back down to the bottom of that range there, really. And what's probably most interesting is the volume there, Chris, as well. Like all that big volume there last week. That's really interesting there. It's only on about 11 or 12 times here, this company there. So it's sort of what's seen as still having a bit of growth in it. It's trading on a bit of a low multiple. So I was a bit surprised when I did see that. Thought this might be trading on a higher multiple, but yeah, I do like the price action there. It does look constructive. Has had a bit of a move. I'm hoping the market might have just sort of cooled off a little bit here, had some sort of congestion. Maybe this will square off it, but it is why it looks pretty interesting to me. So that the sector is pretty firm as well. We've seen names like Zip and stuff they're pretty firm. So definitely seeing a few stuff that I noticed Cairo's popped the last couple of days as well. So just a few in this sector sort of showing a bit of strength. So that's always a good sign as well.
Okay, we'll start contrast to Commonwealth Bank, but we won't get into the historical PEs on a bank versus a company like Square.
Yeah.
Charter Hall, we're back into that property space that you've been talking about for some time. We do know that some of the world's best traders are talking about it probably a month ago, was saying that's where they were getting invested. We were talking about them on the Launchpad on the Friday videos, where you identified a lot of property companies here. Something's underway, and we've got Charter Hall in your report. You're looking at starting parcel 1245 or better is what you've written. Why is this setup of interest to you and this part of the market?
Yeah, look, it's just had a reasonably and sort of positive rally there, pretty good volume off the low, come back in three waves, sort of tightened up a pretty light volume on that sort of decline there until we really got to the low there. And then we've seen pretty chunky volume in the last 5 or 6 weeks, which is sort of signs of accumulation. And we've just seen pretty strong strength in the whole sector. So now we've sort of broken out of that little, tightening wedge there. And yeah, just showing a bit of strength there. So just seeing a few of the names pop up here. Sort of Dexus did jump out of the blocks and then has had a bit of a clip, had its wings clipped today, but generally most of the stocks have been pretty positive in that sector. So yeah, it just does look pretty good here. It's not the one with the greatest yield actually in that sector. Like Dexus and a few others have got some pretty higher yield there. I think Charter Hall's probably always had maybe had a bit more growth sort of in the past there. So maybe some sort of slightly sort of stronger quality within the book there. So, but yeah, I think it does look pretty good here. I think sort of cracking above that sort of lower high there around that sort of 1285 there will probably be a good sign there. So the whole thing's tightening up here at the moment. So just tightening up just under the high. So bit of a VCP within a VCP. Yeah, it does look quite good.
Well, keeping within the property space and the weekly charts, as you talk about VCPs within VCPs, obviously on the daily, they can show up quite differently than what we're seeing on the weekly chart that we have on the screen at the moment. The weekly does help us to understand the movements from 22 to where we are today. Growth point GOZ coming from 440 all the way down to sort of just one weekly session, getting down under $2. So a big pullback where we are now. So that volatility movement, that one-way traffic has similar sort of thing that you're talking about, sort of congested. And then it seems like it's even tightened up a little bit more in recent times. So is there a certain charting pattern that is lit up for you here, or is it?
Yeah, I mean, look,
what is it?
Yeah, look, you've had a pretty deep sort of sell-off there, and then we've had a bit of a bounce, and then we've sort of had that sort of corrective sort of channel forming there. So we are sort of starting to get a few sort of high lows, sort of basing sort of pattern there. There was some pretty good volume around that low as well, so almost sort of exhaustive into that low. And within the sideways move here, within the pullbacks there, we definitely saw volume really lighten up, particularly in the last rally down. That volume was just, there was just no selling. It was very, very light there. So the whole, even though the sector's negative there, just very, very light selling in there. So did see a bit of a jump off the last low, some pretty good volume, and then we're sort of tightened up here on some pretty light volume there, sort of drilling in there. So, I mean, with banks looking so expensive here on those sort of and no yield, the property trust there, even though there's a little bit of risk there with the property, revals and stuff there, there's definitely some pretty attractive yields on offer there within those. So we can sort of jag the sort of the better names here. There's some opportunities there. So I think you're sort of seeing a bit of rotation into that area there, just based on what's happening in the marketplace here. So so it does look quite good to me. I like the fact that it's sort of tightened up again here. I think it's yielding over 7% here. So as long as we don't get sort of too big a markdown like Dexus did today, then it should be all right.
Okay, well, sticking within that space once more, Cromwell, I know you've looked at this one in more detail on the daily chart as well. CMW, we're looking at 012 on the weekly chart that you highlighted here. You've had a bit of a downward channel that it's broken out of. It seems to be above that now, second high. And then we've had these little periods here where it's kind of traveled sideways, treaded water, but seems to be treading water a little bit longer. If you zoom in on that, does that tell you much about the behavior of what's happening here with this compression, this coil that you're...
Yeah, so just what I was sort of like, we again had a pretty deep sell-off into a pretty deep low, and then we sort of started building a base. So, the sort of, bigger the base, the bigger the move that comes out of these things, Chris, as well. That's the attractive thing. So if you have been building a base for a long period of time here. So do have a sort of few high lows sort of building in there, and just sort of starting to square up here. So I think if we sort of break that last little sort of swing high here, which is around 43 cents, that's a bit of a key break there, sort of key pivot point for me technically. So bit of a show of strength there as well. So again, we're seeing, look at that volume throughout the corrective period there. So we saw some good volume off the bounce, and then it's gone sideways on no volume. There was a bit of a sell-off in that last leg down there, which is interesting there. But yeah, sometimes you sort of see that when it's sort of coming off there, obviously you're seeing the volume come in as well on that sort of sell down. But it's been pretty light there since there. So but I think if it breaks 43 here, this is one that sort of can potentially sort of go on with it here actually. So yeah, just pretty interesting here. So I think it's good risk reward here as well, is the way I look at it.
Well, good risk to reward is always a great way to set up trade and monitor it. So we've seen this. You've got the insights property. You're still looking at some of the healthcare. We've got the indices working up towards the ARR. And we say thank you very much for sharing the reports. Gary Glover from Novus Capital.
Thanks, Chris.
If you want to see Gary's insights on identifying property trusts and where he saw that in the Launchpad, you can click on the right-hand side, or you can see that video. It's Friday assessment of the 30/30 list.